No, they're on mute. I think they can all hear me. Guys, those on WebEx, John, Jordan, Wendy, can you type in something to confirm that you can hear us?
I did not.
That window's not open, Professor.
How do I open that?
Maybe click on participants at the top. Let's see.
I didn't realize that.
Ideas, I'm more than willing to.
Yeah.
That's
Indeed.
what Sean clicked that.
Yeah.
I can hear you. Can't see the screen though. As long as you can see me. As long as you can hear me. If you guys see any words of wisdom here, let's go, assuming they can hear me, so be it. One of the advantages coming to class is you can get both. All right, so let's talk about where we are, what we're doing today. Insofar as material guides, you know what is income. You know what's excluded. You know how to compute gains and losses. You know what is the character of the income. You also know who is taxed, right? You know who is taxed. In addition to knowing who is taxed, we moved on and talked about business deductions, right? And we spoke about Code Section 162, 263, 262, right? Or general framework. And that down in terms of what is the general framework. We looked at specifically Code Section 162, carrying on trade or business, ordinary and necessary, and then we looked at 162, A1, A2, and A3, right? And we dealt with also educational expenses. So we looked at a whole myriad of different educational expenses. And it was beginning a discussion. We also looked at business losses. And I want to spend some time because this is an important class, because on the exam, a little telegraphing, you're gonna see several depreciation questions, okay? So everyone here, I will expect to have you harbor or be able to depreciate things. If I ask you on the exam, and you're not going to get blindsided. So let's spend some time just reviewing the general principles we went through last class, making sure you know what time of day it is, and then once we do that, we'll look at some new material. So the operative code section du jour is Code Section 168, which deals with the depreciation of tangibles, and Code Section 197, which deals with the amortization, just so you know, the amortization of intangibles, right? So you have both, tangibles and intangibles, two different code sections at play. We said, and I just want to make sure everyone's with the program here, is that we have different things that we need to know for depreciation purposes. So for depreciation, name one of the things you need to know. Paducah, what do you need to know? Depreciation. Not sure, Kyle?
Oh, what method you're going to use?
What method, right? And David, what method comes to mind?
Straight line method.
What's the most popular method?
The double declining balance one.
Right, 200% double declining, right, is the most popular method. Use straight line, David?
Real estate.
Real estate, okay. Use double declining, and then for most property, And with respect to real estate, you use straight line. That's a given. Everyone understand that? So for exam purposes, everyone's going to get that right. You guys do your internships. You're going to get that right, I hope. All right. The method. What else do you need to know, James? Cost, right? You need to know how much it costs, but along those same lines, that's not one of the three things. You need to know its cost, but your hand up?
The applicable convention you need to know.
You do, but I was actually getting next.
Recovery period?
Recovery period, right? So the three things are, you need to know the method, recovery period, and Max, how do you know the recovery period? What is the bridge that gets you to the recovery period? Right. People listening on WebEx, you can type in. No one's going to stop you. If you feel so inclined, feel free to type in. To know the class life, right? By knowing the class life, you can figure out the recovery period, right? I told you, for exam purposes, it's not going to be a research effort. I will tell you, right? I will tell you what the class life is. You need to know the conventions. Selena, assuming you can hear me, you name a convention, can you type it out? Convention. If David, or John, or Jordan, or Eugen can beat you to it. Of course, guys, start typing. Let's see who gets convention in there first. All right, Half-Life convention. I like the way you guys think. Whole month. Missing two. Come on, guys. Mid-quarter. All right. All right. Gotcha. All right. So good news, people listening on WebEx sound like you're awake, which is good news. All right. The most popular method. Most popular method is which method? Anyone want to type it in quickly? All right. Kalina's got the award. She beat everyone. Half-year convention, right?
So
Half-year.
They're half-life, full month, mid-quarter.
Don't say half-life. It sounds like we're in a biology class.
That's year.
Half-year, right? Year, mid-quarter, mid-month, full month. Each one has a different, and you have to know for exam purposes which one to apply when. Most common exam mistake, when I want to throw myself out the window, is when students apply the wrong convention at the wrong time. When do you apply the half-year convention? Dustin?
Half-year, that's the most popular one.
That's the most popular, but what kind of property does it apply to?
Service during.
Property? Max?
It's tangible.
Gotta be tangible, right? Tangible property. And useful life can't extend beyond, let me just open up the code myself. I think it's 15 or 20 years, or else you gotta use the 50% method, right? So let's just look at conventions and so D1 says, unless something else is applicable, you use the half-year convention, right? And if you look at 168B2, B2 it says for 15 to 20-year property, you have to use 150% method. Real property is always on the mid-month convention. Intangible is always on the full month convention. And when do we use quarter convention? When do we use mid-quarter convention? Anyone? Anyone want to say when do we use the mid-quarter convention, guys? Go ahead, Max.
I think it's that percentage of, I don't remember the exact percentage, but it's a percentage of the tangible value.
Client, you're not going to convince me, so.
Yeah. I don't remember the exact percentage.
What? You're going to say?
So it's when property placed in service during a quarter of a taxable year, whether it's disposed of during any quarter of the taxable year, is placed in service or disposed of on the midpoint of such quarter. I'm just reading the definition from the tax code.
Does everyone have what I sent by email about the mid-quarter convention? I brought some extras. All right. So those people listening on WebEx, look on your computer under announcements. Did anyone happen to bring it, or did no one bring it? I have enough, so let me give these so that you guys share. I just brought a few because I thought a few people wanted to have.
We could share. Yes, we'll share.
Well, I'm a laptop.
Okay. Everyone hot? Thanks.
All right, so let's just talk about this because you can see this on the exam, and I don't want anyone to get mad at me. Place into service, right? More than 40% of your property in the last quarter. You place into service more than 40% of your property. Now, I'm going to point out to you from this handout. If you place more than 40% of property into the last quarter, all the property for that year is put in the mid-quarter convention. Why? It's because it doesn't want taxpayers to put a lot of property into service the last quarter and then claim a half year's worth of depreciation, right? That would create leakage. So if you acquire a lot of property, say December 31st, they don't want taxpayers to be able to get a lot of undeserved depreciation. So if you look here, I put in bold that normally convention is, right, 6/12. There's 12 months last I checked in a year. So 1/2 is 6 months over 12, right? Everyone agree? Then when it comes to mid-quarter convention, notice the bold. You're going to have 10.5 over 12. You're going to have 7.5 over 12. You're going to have 4.5 over 12 or 1.5 over 12. Everyone agree? Got to be one of those four if the mid-quarter convention applies. Simple example. Silver Corporation acquires the following 5-year class property in 2017. There's 3 different pieces of property. Total value is $1.2 million, right? Told is 5-year property, right? Now, normally, let's just take the first property. let's say that was the only property that was acquired, the property in February, no other properties. Tell me what the depreciation, guys, do a quick computation. Tell me what the depreciation would be for the property, 5-year property acquired in February. Come up with a number. Everyone take 1 minute, come up with a number. How much is depreciation in the first year? On WebEx. Come up with a number and type it out. Everyone on WebEx, can you come up with a number? Have property placed into service. $200,000, 5-year property. What would be the first year's depreciation? Recovery period. So folks on WebEx, haven't heard from you. I don't recall if we heard from you. Have a number. Get out. Type in a number. No one's being gutsy on WebEx. No one's going to put a number in writing. Or 175. All right. Let me ask Han, do you have a number? There's only a few numbers to multiply here, guys. Kyle, David? Justin?
Yeah, I got 100.
Now keep in mind, that's a lot of depreciation. Robert,
I got the same.
you guys get that? Convention, right? You're leaving something out. What's the applicable depreciation method, guys? Multiply it by the convention, right? So you have to apply it by the depreciation method. What's the normal depreciation method here? Double declining. Carry it further, guys. Let me make an observation. I told you, guys, mentally, we only have one piece of property. We used the mid-quarter convention. It was put into service in February. It was more than 100% was put in the first quarter. What convention do you use, Justin? Year convention. So what would be the right depreciation number? Counting, guys. Complicated question. Raza, do you have a number? 1,000? Hey, how'd you get that? $200,000. Let's apply it by times it by the convention first. Normally, it's 1/5 is straight line, right? Everyone agree? But it's double declining, right? So it'd be 2/5, right? What? Math isn't hard, guys. 40,000. This were just the only property placed in service, that would be the depreciation. James?
So what's the purpose of your acquisition?
Well, I just ignore the problems here because I'm just saying there's only one property. Now we'll get into three properties. Mental assuagement before we do. Year two, if this was the only property placed into service. Year two, if this was the only property. So for those on WebEx, if you can't see, we have 200,000 times 1/2 times 2/5 equals $40,000. That's year one. What is year two's depreciation? Do you guys have a number? Got a number? Do the half-year convention. Here is the year you put it in service or the year you take it out of service. Agreed? Agreed? You don't apply the half-year convention every year, guys. You don't apply conventions except the year you put it in service and the year you take it out of service. So what should it be? 2% of 160,000, guys? 1,000, right? James, you see, guys, yes, you should apply your convention, but please don't go hog wild.
Yeah.
Once you apply it, you don't apply it again until the property is disposed of or the last year it's in service. That's 40, it's double declining. That's 100, 200,000 less than the depreciation from the prior year. If you don't get this, guys, it will be on the exam, so you've got to know this, okay? This is not, I want people to do well, and you might say, well, you know, the computer will do this for you. Well, it will and it won't. You've got to be able to explain to the client, they're thinking, gee, I'm going to get a lot of depreciation the first year, and you have to explain to them about the application of conventions, right? So the computer may throw out numbers, but that doesn't mean they're self-explanatory numbers. Agreed? For the big leagues, now properties are replaced into service, right? Example I distributed, right? Example that I distributed, does the mid-quarter convention apply? Yes, right? Because when you look numerically, what percentage of property was placed into service the last quarter?
50%.
Right, 50%, right? Everyone agree that 50% of the properties, and all of a sudden, the IRS or Congress says, hold on, we're concerned here, right? Putting a lot of property into service, and therefore you may be extra depreciation that you don't deserve. So we're going to apply the mid-quarter convention. 2017. You guys want to tell me how that was acquired February 15th, that $200,000 worth of property, how the depreciation became $70,000? Back into that number? Now, in an exam, I'm not going to give you that number. I'm going to say calculate that number. But can you come up with how that number was computed? Anyone? Got it? Clue. All right, Kyle.
We do 200,000 times 10.5 over 12 times 2 over 5.
Yeah, that's it. We take this is the year, right, James, for putting it into service, so we do use our convention. And since the midpoint convention applies, one of those four numerators, right, have to apply.
First, it would
Get 70,000. So for those viewing on WebEx or listening on WebEx, it's 10.5 over 12 times 200,000 times 2/5.
my head.
Kyle, you're on a roll. How do we get 60,000?
400,000 times.
Again?
Would it be 400,000 times 7.5 over 12 times 2 over 5?
Yeah. Now we're in the third quarter, so it's 4.5 over 12, right? That's we're gonna get 60,000. And when we put property into service, since it's December, what's it gonna be?
Yeah, 600,000 times 1.5 over 12 times 2 over 5.
Right? 1.5 over 12 times 600,000 times 2/5. Now, without me saying it, then the next year, 2018, let's just do the first property. The property that was acquired in February, originally for 200,000. How do we get the number? Ross, I got to ask you, how does the number 52,000 come about? What do you think you multiplied? Multiply. What do you multiply? Robert, what do you multiply? James.
You multiply
Declining, so it's 130 times 2/5, right? We don't use any convention, right? That's where the 52,000 comes from. Mistake students make, practitioners make, they don't reduce. Every year you got to reduce the balance by the prior depreciation deductions. Third part of the problem says assume the same facts except that Silver Corporation sells the $400,000 asset, right? That's the second asset. November 30th, 2018. Number 119 come from? 119,000. Well, All right, guys, it's not, it comes from. Well, guys, they ask you, the starting point is planning. So what's our starting point? 40,000, right? Because the prior year's depreciation was 60, right? Everyone agree? Convention, we're selling the property. So when you acquire property, you use the convention. When you sell the property, you use the convention, right? Convention, the mid-quarter convention, right? Because whatever convention you use going in, same convention going out. So, guys, what's it going to be?
Times 1.5 over 12.
Notice James just made the perfect mistake, and a common mistake, and that's good you made it. I didn't even set James up, but this is the most common mistake students make. James,
Tracking.
did the taxpayer use this property throughout most of the year? Isn't this the flip? They didn't put it into service in November. They took it out of service in November. So what should,
10.5.
thank you. 10.5 over 12, right? Everyone agree? 10.5 over 12. 5 over 12 times what? Times 2/5, right? Normal depreciation. And guess what you'll come up with? 119. So for an exam, no one's going to get mad at me if I ask those kind of questions, right? Got it? Those folks listening on WebEx, I don't know what you can see or not see, but hopefully I see some numbers now. Hopefully you got clarification, all right? Lena apparently can't see, but I believe everyone else can, or at least no one else but, sorry, Galena, everyone else apparently can see, or at least no one else's video. Oh, okay. Well, um, guys who, I'm going to call computer services and see if they can hook up the video. I'm going to try one thing. All right, so let me, even though you can't see the video, you can hear me. I'm going to try computer services one more time to come in, but I'm going to keep talking. Do this. Okay, I called before Soled, room 206, and the WebEx is going, but they can't see the video. So come down here, try to connect the video. If they can come as soon as possible, it'd be great.
Why?
Just so you know, I'm in the middle of a class, so I'm going to hang up and let you say
No.
something. Okay?
Fuck, it's fine.
Good. Send someone as soon as possible. Thank you.
No, because I was in my head I was thinking 40.
Okay, so folks listening on WebEx, I apologize, but these are the kind of things that computer services is supposed to take care of. But all right, so Just reviewing the material, guys. Go through starting on page 394. The authors talk about why we have depreciation in the first place, prerequisites for depreciation, which is placing a property in a trader business. Let's just make sure everyone understands your personal car, your house, all the things that you're carrying around today. You can't depreciate it because you're not using it in a trader business, right? Or property held for the production of income. So that's another way of saying investments can also be depreciated. So those are the two things. You need to have a useful life. Things that do not have a useful life cannot be depreciated. Depreciable amount starts off with your cost basis ordinarily, Code Section 1012. As we know, you guys have done this long enough. There's an adjusted basis, right? Under Code Section 1016. Tax basis reduces your depreciation. Depreciation methods we went through. Generally double declining, sometimes 150% if it's 15 or 20 year property, and then straight line for real estate. Authors make the point, beginning on page 399, that basis reduces your adjusted basis. No one's shocked by that. You guys know that. Sound cool at the water cooler, no pun intended. Keep in mind it's also referred to as the maker system, this modified accelerated cost recovery system. This was the depreciation after acres. The accelerated, Congress was losing, Treasury is losing too much money, and now we have makers. I will, for exam purposes, give you the class life. If I give you the class life, you can figure out the recovery period. Salvage value is always zero, right? Salvage value is always going to be considered zero. Conventions, like I said, you have to know them. There's 4 of them. 403, don't worry about the anti-churning rules. That's sales between related parties. Depletion functions in much the same way as depreciation. Okay? Depletion, depreciation. Depletion refers to natural resources. We looked at 2 cases, one involving Sophia. People on WebEx, and there's quite a few, cannot see us. Periodically, you tell me that people play around with the system, and therefore we lose the video. So maybe there's a quick fix you could teach me so I don't have to run down here. So people on WebEx, we have the computer science genius here who's going to hopefully get you the video. Yes, all the people here, you're watching. If you want to type in and say you can't see us.
Well, the camera's off, so turn it on.
Where's the camera, by the way? So if you're listening on WebEx and all of a sudden you can see us, can you let us know? It looks like it's turning on. If I see an X through it, that means if I simply click it, it should. People on WebEx hopefully is here. All right, so we looked at both, and we looked at bows, and we looked at depreciation, that there was some limitation if it's used for personal reasons, non-depreciable in the case of the airplane that was used for personal use. The bows didn't really have, they were subject to wear and tear. It was hard to put a useful life on them. On WebEx.
Can't see now.
See now. All right. So leaving on my phone because of, thought I might have to call Sophia. But Sophia, you've now solved, at least people on WebEx, all the people on WebEx, you can now see us, I hope. Thank you, Sophia. What is it the next time I should do? Or
If you see an X,
all right. Thank you. So beginning on, we're going to go through some problems. Beginning on page 420, there is computation and depreciation, 200% double declining, straight line, and the alternate depreciation systems. Congress, as I suggested to you last time, Congress sometimes can be magnanimous and give certain benefits to taxpayers. And Congress has decided, as you know, in the 2017 Act, to juice up the economy. How did Congress juice up the economy? Two definite approaches to juicing up the economy is Code Section 168, Code Section 168K, at least for the time being. Aside from real estate, you can take 100% depreciation deductions. In other words, anything you put into service, immediately expense it. Historical norm, to the contrary, anomalous. Then, Code Section 179, which no one needs right now, but in yesteryear, when depreciation truly in existence, and whoever's elected the next president in 2020 could reinstitute meaningful depreciation. And when we go through the problems, I'll explain what I mean by that. All business owners can deduct their first $1 million of property they put into service under Code Section 179. There's a limitation, however. You guys saw this with respect to Code Section 195. Remember startup expenses, that if you put more than $50,000 of startup expenses, that for every dollar you put above 50, you lost $1 of the immediate $5,000 that you could otherwise deduct. Similarly, Code Section 179 bonus, for every dollar above 2.5 million, every dollar above 2.5 million you put into service, you lose $1 of the immediate deduction. So if you put 3.5 million into service, you can't deduct anything under Code Section 179. You put 3 million of property into service, you lose 500,000 of the immediate $1 million of deductions. Congress, again, giving a way to juice up the economy, Code Section 168, immediate deduction. Code Section 179, bonus depreciation for small businesses. But Congress thought that certain things needed to be curtailed. So with respect to so-called luxury automobiles, listed property, Code Section 280, capital letter F. Code Section 280F puts the brakes, no pun intended, on depreciation deduction. So in the case of you or your clients who are buying Silver Shadow Rolls Royces, you can't immediately expense your Silver Shadow Rolls Royce, and we'll go through a problem like that. Give a short description of amortization of intangibles, which we'll talk about as well. So my goal line, guys, is to go through the problems. Here we're going to spend some time and make sure, hopefully, fingers crossed, everyone knows this stuff. Then we're going to talk about real estate. And time permitting, we're going to talk about investments under Code Section 212. That's the beginning of the new chapter. If I do my arithmetic correctly, guys, we should be in very good shape to get to where I need to be, or you need to be, where we finish not only this chapter, we should today, and finish the next chapter probably next class. And that gives us 3 more classes to get through timing issues, right, in chapter 19. So we're, in my opinion, in very good shape time-wise. But do bear in mind, as I'm saying this, time is, that the sand is going through that hour class rather quickly. So You guys have to put in the time, effort, and energy into tax. I know you have a lot of other exams, but I'm hoping on Wednesday you have another exam, correct? But after that, do things quiet down a little bit until my exam? All right. Well, I'll be a little biased. You know what is your most important your course this semester, so just think about that. All right. Oh, go ahead, Max.
I have a question regarding code section 179. So every dollar you were saying that you exceed 2.0 million, there would be
Immediate deduction.
from
Okay. Again,
$1 for the 1 million that they have. $1 for every $5,000.
that's with respect to code section 195. Sort of. All right, and let me just pause and ask, because now we're in a good place. We're talking about weekends. Some of you probably watch the Yankees unfortunately lose. Okay, sorry to hear for the Yankee fans out there. I did see a play. If you guys haven't, I do say you should see. It was emotionally very gripping. So if you haven't seen To Kill a Mockingbird, I saw it in New York, and truly, it's theater at its best. So if you get a chance, Jeff Daniels stars in it, and he's going to be off soon. I think he leaves the show in 4 weeks. But don't use that as an excuse. Oh, he's not in the show anymore. I don't need to see it. Get a chance. Once you're done with the semester, guys, okay, I put it on your to-do list. It's really worth your while. We had lousy seats, but it was still gripping, even though we were kind of some corner up high. So if you can do it. This Saturday night, guys, one of the last times I get to say to you, we got 60 people coming. If you haven't signed up, there's always still time. Consider coming Saturday. Should be a lot of fun. So I'm hoping to see at least some of you on Saturday. And by now you should figure out, many of you might say, gee, I don't really have that much to do on Saturday night. So what better way to spend a Saturday night than a little tax, dinner, and entertainment, right? Anyone do anything this weekend they want to share with the class?
Halloween parties.
Going to Halloween parties, but that's after. This week isn't Halloween the 31st, of course, but isn't that Thursday? So that aren't most Halloween parties the weekend after, or is it this weekend?
I've been going to Halloween parties like since October.
All right, so you're Halloween partied out, Kyle. So it's time for a tax event.
I don't know about that.
All right. Anyone else do anything? Kyle, I got to ask the natural question then. What did you get dressed as?
I mean, the Joker movie came out, so I've been dressing as a clown for all these Halloween parties.
As a clown or as the Joker?
I mean, I put Joker-esque makeup on.
Okay. Just wondering now, people on WebEx, now that you can see us, we can't see you, but does anyone want to share their favorite Halloween costume? Anyone's going to type in that they're going as or they've been. Anyone have their favorite Halloween costume? Need to type in anything. All right, well. And let me just say this, it's the festival of Diwali, right? On Sunday. So several of my students asked if they could come in a festive attire on Saturday night. So if you're celebrating, or even if you're not celebrating, if you want to, and one of my students, we're going to do a little videotape on Diwali. So you're welcome to join us for that as well. All right, page 426. On January 2nd of the current year, for $300,000, Depreciator purchases new equipment for her business. This is made from an unrelated person. Equipment has a 6-year class life. Once we know it's 6 years, you can look at the chart. And you will see on code section 168C that if it's 6-year class life, it's a 5-year recovery, right? Have a salvage value of $30,000 at the end of the time. Do we care? Do we care? We couldn't care less. Code section 168 B4, I believe. It's either B4 or B5. Code section 168 B. Okay. B4 specifically says treat value, salvage value as 0. It's going to have no impact. Depreciator is a single calendar year taxpayer. She uses the equipment only in her business. Raza, what kind of asset is this? We'll do it. Paducah, label. Raza, don't give up. You can shout it out. I don't care. Yeah, 1231, right? Everyone agree? One asset. Paducah, when you say 1231, what other code sections come to mind like peanut butter and jelly? Lovely. 55, 1250, right? I like the way you think. 1245 and 1250. Everyone agree? So just, again, guys, we jumped ahead and 1231 is going to be important when you compute the character of the gains or losses, right? We have 1231 A4C, the sub hodgepodge. We have the main hodgepodge. And we have 1231C, the recapture rules, which numerically never change the outcome, right? All those things are dancing in your head. If you remind me today or tomorrow, guys, I'm on a roll. I will share with you because why not share with my tax class? I had this op-ed that was in yesterday's Star Ledger, hard copy, but tomorrow, the op-ed that I wrote with Mark Everson, it could even be hot now, James, if you Google it. Everson should be in the newspaper called The Hill. That's kind of DC. So, EVRSON. So the editor said she was going to make it hot later today or tomorrow, but that was a few hours ago, so I don't know. So if you want to be entertained, particularly with the comments, you guys can get real entertained by that. Consider looking at it. Problems, compute the depreciation deductions and with respect to equipment in each of the first 2 years and determine the adjuster's basis at the end of each of those years. Hopefully everyone can see this now on WebEx, so that's the good news. Hopefully I don't leash. Everyone, now that we have the depreciator does not elect out of code section 168K, so what does that mean?
Use double declining balance.
168K is not going to make for interesting exam questions because it's saying it's too easy. I just don't think it's going to be sustainable. $168K allows what in year one? Depreciate the or expense, depending on your verbiage, the entire $300,000. Congress gave carte blanche, and you can see makes it very attractive for companies. Equipment, because in yesteryear they would have to do it over, right, 6 years because of the half-year convention, but now they can take the entirety, right, all in year one. depreciator elects out of 168K, but also elects to use 179. And by the way, in other words, 168K, you can elect out of. You don't have to have it, okay? In other words, you don't have to have this faster depreciation method. If you look at code section 168K7, you can elect out of this method. If you do, you use 179. One in year two. Under code section 179, Nelly, can you deduct the whole thing? As long as you didn't put more than $2.5 million of property into service, right? You can get the $300,000. And the answer is the same as A. Suppose you use the declining method. C. 178K and you don't elect 179. And let's do all 6 years here, guys. Everyone, try to fill in this chart. Try to do 6 years of depreciation. Listening.
When we buy it on January 2, does that mean we have?
You always have to use a convention. Which one do you use? Loudly? And you're making a good mistake today, but don't do it again.
Right, you bought it on January 2. The year.
But is Congress worried about this person? Because they're using it most of the year. Are they getting how much depreciation? No. They're only getting a half year's worth of depreciation. Remember, James, you're about to say 10.5 over 12, which is even better than a half, right? The person really, so Congress doesn't care about this person. They care about the person if they stuff in the last quarter a lot of product, more than 40%. Here, this is okay. We're going to use the half-year convention. Agreed? The depreciation, guys, for the 6 years. Depreciation each year. Get there. 168. They're normal. I've been teaching this course as opposed to 168K and 179 being so robust. This is the problem C is the traditional answer. Problem C is the traditional answer. See if other people get that. So people on WebEx, now that you can see us, type in the first year's depreciation. $60. Different number.
The class life. This, when you say the equipment has a 6-year class life, it's a property.
Recovery period. Right? Right?
I'm asking what's the difference between the two?
Let's look at code section 168E. 68E. Applied to class life, and here we're told it's 5 years, right? And it says, if you look at 168E1, that shall be treated as 5-year property, right? Right? And what we're going to see, you need the class life for something called the alternate depreciation system under 168G. Okay? Hold that thought. So you need to know, now you need to know the class life to know the recovery period, but sometimes you use the actual class life under the so-called alternative depreciation system. 68G. It produces a slower depreciation method. And you might say, who the heck would ever use a slower method? Right? Fair question. 312. When you guys are in corporate tax and you want to compute what's called earnings and profits, the government, meaning Congress, requires that you use the alternate depreciation method. I just wanted to let you know that there is utility to the alternate depreciation method. So let's blow through this. So the first year, the depreciation is 60,000. You're absolutely right. How do we get that? Well, we take 300,000 times what?
1/2 times 2/5.
Times 1/2 times 2/5, right? Everyone get it? What's our adjusted basis? 240. All right? What's your double declining?
No.
Normally straight line is 1/5, right?
Yeah. The one, the 1/2.
Half is the half-year convention. Property into service, you use the half-year convention unless the mid-quarter convention applies. Two. Everyone have a number? 6. How did you get it? $40 times 2/5, right? And that's 96,000, right? Okay, 57,600, right? So what we're going to do here, guys, and I can just say it's percentages. 40%, right? Depreciation is 57,600, 86,400. What do you think happens in year 4? 40%, right? 4,560. 1,840. If you look with double declining, yes, with double declining, look at 168B1B. 168B1B. Switching to straight line method for the first taxable year for which using straight line method with respect to the adjusted basis as the beginning of such year will yield a larger allowance. In other words, that you will never get to 0. Everyone agree? If you keep using 40%. Agreed? So you're instructed under the code to use when that's going to produce a larger depreciation deduction. Everyone agree? you could take 40% in year 5 of 51,840. Or how much time remains? A year and a half, right? We have year 5 is 1 year, year 6 is a half year, right? So which yields a bigger depreciation deduction? 40% of this number or 1 over 1.5? Line 1 over 1.5. You're going to see is straight line produces a larger depreciation deduction. A half year, and guess what? Zero. The message here I have for you guys is you got to switch, right? The half year, excuse me, to the straight line method. Once that produces a larger depreciation and double declining. Numbers.
Switch from double declining to
Straight line.
straight line declining. Can you explain that again when?
Yeah, and theoretically, each year you're supposed to test, okay, which is going to produce a better result, straight line or double declining. The computer is going to do this for you, okay? But the point is, what the computer is going to do is compare and contrast straight line versus double declining. What's 40% of this number? I don't have it. Is it 34,560? 40% of 51,840, guys. 1,000 what?
20,000.
Is it that low? Okay, but you can see, straight line is going to produce a much larger deduction, right? Because you have only a year and a half to go, so the numerator is 1, the denominator is 1.5, right? Because you're depreciating the remaining balance over a year and a half. Go ahead.
Can I just see your computation? I just can't figure out how you got once you switch to straight line. I don't know why. I just can't figure out the math to get 34,560 again.
Okay?
Because you said it's like 1.5. I just can't figure out.
Take
I'm
1
multiplying
over
51.
1.5, which is how much? So it's 2/3 of this number.
You're just taking 2/3 of 51,000.
Yeah, does it 840? It should produce the 34,560, right? Coming out with that number?
No. I don't know. I saw 51,000 times 1 divided by 1 over 5.
51,000 times 840 times 2/3.
Times 2/3.
But it should produce the same outcome. The same number I do, right?
Okay, I got it now.
Yeah.
Yeah.
All right, you got it? See, except depreciator elects under 168B to use the straight line method for the equipment and all other property in that class. So you can elect use the straight line method. And so let's use the straight line here. Count, depreciation, and adjusted basis. Guys, Take 2 minutes, come up with a nice chart. On WebEx, hopefully, we're getting your numbers as well. On WebEx, want to give me a number, first year depreciation? David, Galena, John, Jordan, Wendy, Eugene? 2,000. Agree? Anyone disagree? All right. How many years are we going to depreciate this? Right? How many years, guys? 6, right? Because the first year we have a half year convention. We have half year times, how much was this property? 300,000. One over 5, right? Equals 30,000, right? That's 10%. The amount of depreciation is 30. What's the adjusted base? Is 270. Year 2, what's the depreciation, guys? Right? Because we're going to have depreciation, right? 50% all the way down until year 6. And that's going to yield 60,000, 60,000, 60,000, 60,000. Right?
Wait, I have 54.
I got 54, yeah.
Because doesn't your back, don't you
It's
do?
not double declining.
Oh, so you still use 300,000.
It's your plain vanilla straight line.
One fifth of 270.
You're using 270. You're using 300. It's straight line. Here, how much depreciation? 10%, right? 3,000. 0. In your general accounting class, right, for GAAP purposes, I bet you did this all the time. You're being flummoxed right now. Also learned a new word this weekend. That word. Hear this word, métier?
French?
Yeah. Anyone know? I had to look it up. Actually, I had a friend of mine that called up and said, I didn't have time to look it up. I wasn't behind it. Something that you're strong in, your strength. I'm hoping tax will become your new métier. Right, guys?
Year or many-year?
I don't know. How do you think it's pronounced, Kyle? Yeah. Put it through the computer and ask it to say it out loud. I don't want to walk around the world saying it incorrectly. So.
ATA. ATA. ATA.
There's no R. It's silent, right?
ATA.
French to R's usually.
Métier.
Métier.
Like Cartier, like the brand. Métier.
Métier.
3 syllables, right? Métier.
ATA.
Almost sounds like an N at the end, right?
ATA.
Yeah. Nice. All right, Kyle, thank you. I won't go around. I'll have other reasons to sound ignorant, but not that one. Métier. Guys, tonight you can talk about your métier. Add that to your repertoire of things you now know. Got this? Everyone on WebEx? See this? You can do it. You won't get mad at me if I ask a question like this?
Professor?
Yes, sir.
The code section that says you can decide in the last year's depreciation.
Doesn't say you decide. First of all, this one you don't decide.
The one that, says you take whichever's greater
Yeah.
is 168B2.
What you need? Except the equipment has a 6-year class life and depreciator elects to use the alternate depreciation system. How long are we going to depreciate this property over, guys? Class life, right? But we also know we have to use the half-year convention going in and the half-year convention going out, right? Under the alternate depreciation system, do we use the class life or the recovery period? Class life. Everyone agree? So, given what I just told you, what's the depreciation the first year? Come up with a number. All right? You guys have a number? First year's depreciation, Kyle. You're itching to tell us.
Oh no, I couldn't come up.
Guess you're not itching. David.
I'm not itching.
On? James? A number. Say loudly.
25,000.
25,000. Anyone have a different number? Number. How'd you get it?
The same thing as the above, except for instead of 1/5, 1/6, because using class.
Yeah, 1/6. Everyone agree? Using class life. So instead of 1/2 times 300 times 1/5, it's 1/2 times 300 times 1/6. Right? And if you do that, the percentage is actually 8 1/3. Depreciation is 25. That's 275. And then if you do all the other years, you don't have to do half-year convention. You just get 16 2/3, and then the final year we're back to 8 1/3. Right? Not only 50, 50, 50, all the years. The last year we're back to 25, right? And it's 175, 125, 75, 25, 0. In all these problems, we're putting $300,000 of property into service, and guess what? $300,000 for the deductions. Everyone agree? So is the taxpayer, though, and I'm sorry for my repetition, is the taxpayer indifferent to which of these methods? Because the taxpayer is going to get $300,000 of deduction in any event. Different? Nellie's spot on. Time value of money, right? Taxpayer prefers getting these deductions front-loaded. Taxpayer would never, in my opinion, choose to use the alternate depreciation method, right? Because much slower depreciation, or straight line for that matter. Sometimes the code forces you to use different methods.
Professor, why did we use 7 years?
Because you use class life,
Okay.
not the recovery period.
And the class life is under 168.
168E.
Oh.
And 168G, which is the alternate depreciation system, tells you to use the class life. Instructs to use the class life. Historically, I'm going to tell you when people what used equipment, someone else, they had to start the whole depreciation system again. That's true, but believe it or not, and this is a pretty, knowing a lot of my friends who practice tax regularly, you look at question F. Purchases the equipment which is used property from an unrelated party and doesn't elect out of 168K. And Congress said with new property, we want people to buy new machinery, right? Because that's good for the economy because people are producing new equipment, right? Good. Believe it or not, Code Section 168K extends to used property, which is counterintuitive, right? Because Congress doesn't really juice up the economy the way Congress wants it if you're buying used equipment. But if you look at Code Section K2A, two little i's, and you look at E2 as well, E2 little i's. Your notes for problem F, same result as in A. It doesn't matter if it's new or if it's used. It doesn't matter if it's new or it's used.
This letter you put after 8.
Oh. 168 K2A, two little I. Sorry, got the handwriting. Question G. But now you buy it from a related party. Related party under 168 F5A. Related party. Your sister. And we're not going to get into this related party, but you can't seek to get faster depreciation. Right? You can't seek to get faster depreciation by buying it from a related party. Let's leave it at that.
Unrelated.
If it's unrelated, then you can take advantage of Code Section 1. Question 2. Question. Correctly, that the alternate method is always straight line. Yes, Wendy, you understand it correctly. Correct. In the alternate depreciation method, you always use straight line. Question 2. Luxury automobile and personal use at a cost of $65,000. What kind of depreciation deductions? And the authors here want to illustrate the application of Code Section 280F. Okay, 280F. And here, where do you get these depreciate? Normally, how many years? I'll just tell you this. And again, for exam purposes, I would tell you this. The class life is 5 years, okay? And the recovery period for cars are 5 years. Depreciation, could you normally take the first year?
First year for a luxury automobile, isn't it just limited to a maximum of 52?
What are you reading?
280F.
Everyone turn to code section 280F.
It says for the first taxable year in the
Oh,
recovery
yeah,
period.
sorry. Oh, the life is.
Normally, how much depreciation deductions are you allowed? It's 5 years times the half-year convention, right? Times double declining. You allow 13,000, but I'm just going to call to your attention as well. Code section 168K2F. I'll repeat. Code section 168K2 capital letter F provides an extra $8,000 of depreciation. $8,000 depreciation deduction. So for your notes, and maybe even if you want to write in the code permits not only the 10,000 you see here in code section 280F A1A, code section 280F A1A, but you get another 8,000 or a total of 18,000. The basis 47,000. Congress is saying to you, normally, right? If you buy the normal kind of equipment, you buy new, okay, some sort of machinery, you can expense the entire thing. But with respect to an automobile, they're capping, right? At 18,000. How about year two? You can normally take 40% of 47,000, right? Agree? Under double declining. Well, what's the maximum allowed under the code? 16,000, right? Well, you could take 41% of 31,000, right? What would be your deduction? $600. You can see what the code provides is that in later years, you can take $5,760 per year for years 4, 5, and 6. That would ultimately reduce your basis if you did to 4,120. Year 7, you could take 4,120, and the outcome would be 0 at the end. In other words, the code creates caps. Congress is circumspect with respect to so-called luxury cars that you can't go hog wild with the amount you can otherwise could deduct. Questions? Everyone see where these numbers are coming from? Cap on code section 168K. They put a cap on the normal double declining rules. B is not that more complicated, guys. What you could do is use it in red. Take these and times it by 0.7 times 0.8, 7, 0.6, 0.6. And what you would do here, I'll just depreciation amounts. right? This should remind you of the airplane, right? Depreciation deductions in red. You ever have a question gnawing at you a little bit? You just never get around to looking at the answer. I just want you to realize that even though you're using the car for business and personal, what happens to your adjusted basis? Because if you keep going here, if you notice these numbers of the depreciation allowance, adjusted basis by these numbers or by the entire depreciation deduction. And just to let you know, this gnawed at me for a while. I never had a chance to look, but then all of a sudden I said, I should look. If you look at code section 280FD2, code section 280FD2, what does it do? Your adjusted basis has to go down. Personal use of the car as well, because if it didn't, ultimately you could take a full depreciation deduction the entirety of your car. Think about that. Is that suppose you use the car 60% for business and 40% for personal. Over the years, if you kept using the car for 20, 30 years, you would ultimately depreciate the full value of the car, even though you kept using it 40% for personal use. Just sharing that with you. So here is, guys, anytime you have a 1231 asset that's used for both business and personal reasons, you got to bifurcate the asset between the personal use and the business use. You see, we're not going to do a computation, but if you use the car for only 50% for business use, okay, you use the car for now only 50%, ends up happening a special rule that FB2. FB2. If your business use does not exceed 50%, and here it's exactly 50%, see what depreciation deductions the taxpayer would have been allowed under a straight line method, not an accelerated method, and capture that in ordinary income. So let me just quickly explain what you know, that may be a little obscure what I just said. Again, if you look at 280, and the authors, by the way, go through this. If you look at page 424, the second full paragraph. Second full paragraph on page 424. If you total the deductions here, here's 1 through 3. What were the depreciation deductions? Years 1 through 3. Years 1 through 3. Total, guys, this totals 32,020. Okay, 32,120. Happen here if they use the straight line method. If they use the straight line method, here's 1, 2, and 3. Depreciation deductions would they have? 1/5 times 1/2 times 65,000. 6,500 under the alternate depreciation method. Year 2, 1/5 times 60,000, right? Because it's 1,000. Three, it's capped at the normal 9,600. That's going to, if you look at year 3 under code section 280F, the deduction is $9,600. This business use 7 as times 0.8 times 0.7. Total here 4,550, 400, 1,720. The total here is 21,670. Take 32,120 less 21,000. The difference is 10,450. 1,450. That is the difference. When the person used the accelerated method, they got a pretty robust deduction the first 3 years, 32,120. Use the alternate depreciation method, they would have only received 21,670. The difference between these two numbers, the difference between the two, is in year 4 they have to recapture this. Generally, is recapture good or bad for taxpayers? It's, everyone agree? It's bad. They have to recapture this into ordinary income. Why? Because Congress said, you know what? You're not really using this listed property in the way that we anticipated. We were too generous with you, how much depreciation we gave you the first 3 years. We're going to force you to recapture this into ordinary income. I'm just sharing this with you. I don't think you need to look for an actual problems per se on the exam, but it just heightened your attention that Congress has all these mechanisms that people, taxpayers, go over the top. Just for your notes, let's look at question 3. Purchased a restaurant from owner, made the following payments as part of a purchase or in starting the restaurant. Determine the deductibility of fixed payments. Suppose a payment to owner for goodwill. Is that amortizable? For goodwill, guys. Where would you want to look? What code section? You want to look at code section 197. Everyone agree? Code section 197C. Open up your code. An amortizable 197 tangible. Amortize it over 15 years. What is a 197 intangible if you look at 197D1? Goodwill. So guess what? Purchase goodwill can be amortized over 15 years. Your answer to 3A, 15 years. Your answer to 3B, payment to owner for a covenant not to compete lasting 5 years. How many years do you amortize that over? You amortize it over 5 years or 15 years, guys. What about a covenant not to compete? Definition, look at 197, D1E, right? Covenant not to compete. 15 years. You know, it's for a 5-year period. You still have to amortize it over 15 years. You can also look at Regulation 197-2K, Example 6. Regulation 197-2K, Example 6. About a payment to the media to advertise the restaurant. Pay $100,000 to an advertising company. Advertise that $100,000 over 15 years, guys. What kind of expenses advertising generally? Again, David?
Business expense, 262. Business expense,
Business expense under what code section?
162.
Yeah. So this should be able to be expensed immediately under 162, and the regulations confirm that. Regulation, once again, 197-2K, Example 1. To buy the franchise. 197 intangible, guys. Good luck. 197D. Right? $15 years. Payment for a liquor license that it has a 5-year life. And here, the regulation, surprisingly, if you looked at the regulation, that liquor license, that kind of license to be amortized over 5 years. Okay. The authors cite you to that regulation 197-213, 5 years. The liquor license is extended indefinitely. Well, over 15 years. And look at code section 197 D1D. Last question here. Law student. $1,000 expenses to take a bar review course and $500 for admission fees. What's deductible here, guys? Bar exam. You guys are going to take CPA review course. Deductible or not, guys? Right.
Personal expenses, so.
Non-deductible, right? Code section 262. That expense. If it's to improve your skills, but this is to qualify you to be a lawyer, qualify you to be an accountant. Okay, if you're already an accountant and you're taking this course, you shouldn't be taking this course, right?
I don't have the CPA.
This would qualify you for a new trade or business. It's a different line of work. The courts have held. You're saying nursing, but you get a medical degree. You can't say, well, I was involved in licensing health, and therefore they should be deductible. Medical degree would be non-deductible. Nelly?
This would be considered a new trade of business in
Yes.
a CPA.
Yeah, if you look at regulation 162-5, that elaborates this. Question. About the bar admission fee. You're theoretically a lawyer or you're a CPA, but now you have a same sort of admission fee. Well, if you look at the regulations the authors cite you to, that would probably, you couldn't expense it, but you probably could under 197D1D, treat it like a licensing fee and amortize it over 15 years. This, that most people would probably just expense it and say, well, IRS is never going to chase us down for the difference, but just technically what the rules are. All right, so we have 10 more minutes. Let me just talk to you about the last 3 pages here. And just make sure everyone's with the program. I really care on page 428 about the general rules. Remember, with real estate, guys, and your notes should reflect this, and for exam purposes, it's always straight line, always straight line. The convention is always the mid-month convention. Mid-month. Use the mid-quarter convention here. Generally, for residential real estate is 27.5 years, and for commercial real estate is 39 years. Page 429, Congress tried to give a boost to the real estate industry. There's a surprise. But if you read the material on page 429, there's too many loose ends with respect to qualified improvement property. So it's unclear whether or not if you put improvements in, whether or not they can be taken over a shorter useful life. So for your notes and for our exam, don't worry about that because the law right now is unresolved on that issue. The rehabilitation credit, we're going to see an example of this. And do not, for exam purposes, look for low-income housing credit. Not going to be on the exam. Just go through, and on Wednesday, I'm going to ask you some more questions on this. So let's just go through and make sure we go through 1 or 2 problems, then we'll call it a day. For next class, just keep in mind that we are going to, I know you have an exam, but if you could spend a few minutes going through chapter 15, that'd be terrific. It's not a very long chapter. I don't know how far we'll get, but we'll try to get pretty far. Chapter 15. Let's just take 1 or 2 examples just to make sure. Suppose you buy a commercial piece of property and you put it into service, say in February of 2019, okay? And it costs, pick it up, $300,000. So you buy the commercial building for $300,000 in February. Depreciation, don't say it out loud. Everyone come up with a computation. Come up with a computation. And those on WebEx, if you haven't, hopefully everyone's with me. Give me a number, okay? Give me a number. You put in commercial property, $1,000 cost. Depreciation, can you take the first year? You bought it in February 2019. On WebEx, racing to type in a number. Wendy, Jordan, John, Galena, David.
Put it into service.
Been in service in February 2019. How much depreciation? Got a number here. You got a number? All right. 39 years. Convention, right? All right, so what's the numerator and denominator? We put it into service in February. Tell me?
10.5.
Yeah, 10.5 over 12 times what?
No, because it's February. Oh, times 1/39.
1/39 times 300,000 equals how much?
7,692.
7,000 how much?
7,692.
Beforehand, 690. Okay, so I'm going to take out his word. That? No, anyone disagreeing? All right, we'll go with yes. Suppose we sell it February 20. We sell it February 20. How much depreciation in year 2? We sell it February 2020. Got that.
No, for the first year, it's supposed to be 6,730, not 7,690.
Okay. Why?
I think he just messed up the calculation.
Yeah, I forgot.
His,
Oh,
his
you
thing
messed
was
it up?
fine. Yeah.
Okay, so the real number is what? 6,000?
730.
All right, I mean, I took your word for it, so. 2, we sell it in February? Depreciation?
1.5 over 12.
0.5 over 12, right, James? Times 1/39 times 300,000 would give us how much?
$161.
All right, so everyone's on the same page this time, 961, okay? Notice how the mid-month convention works, right? Depends on the month you buy it, depends on the month you sell it, right? December, what would be the numerator? In December. 0.5, Justin. You're going to make that mistake, and then you're going to get mad at me, but I want to take ownership. That if you sell it in December, it's 11.5 over 12. Very common mistake, one that Justin made, but he won't do it on the exam, is it's not true. 0.5 over 12.
So, but if you bought it in December.
One in December would be 0.5 over 12, which makes logical sense. All right, so guys, good luck studying for Wednesday for what exam do you guys have?
Finance.
Good luck for finance. I will hopefully see everyone here on Wednesday. Hopefully you'll have a chance to have looked at chapter 15. We'll finish this chapter. We'll go right into 15. and we'll take it from there. So everyone have a good afternoon. Good luck with studying. Those on WebEx. All right, good afternoon. Good luck on studying. And we will catch up with you guys later. Hopefully you can make Wednesday's class. Thank you.